Heya Cryptozens. Tonight's show. Are crypto cutbacks signaling crypto winter? It's 10 p.m. Pacific time. The date is June 3rd, 2022. Welcome back to the Crypto Overnighter. My name is Nicodemus. I'll be your host. The cover model, mascot, and co-host for this podcast is Tex. And together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. So take a minute, go ahead and subscribe to the podcast now, because we're here at 10 p.m. every night so that when you leave in the morning, you're taking with you the crypto news analysis that you need to start your day. And keep in mind, nothing in this show should ever be considered financial advice. Coinbase, Gemini, Bit, Bitso, cutbacks, hiring freeze. It's getting kind of scary out there, isn't it? Crypto Twitter has always had kind of a bit of a gallows humor, but it's getting pretty grim and not as funny. And I think the question on everybody's mind is a reasonable one. Is crypto winter here, and how bad is it going to be? Well, let's take a look at some of the forces at play here. Huge, massive sell-off. It's really starting at the end of fall, early winter last year. Using Bitcoin as a gauge, Bitcoin peaked in the middle of November on the 10th. And then that was the big dump that came after that. Didn't show any signs of relief until the end of January. And at that point, Bitcoin just started trading sideways for a while and then continued to dump again. From 69,000 to just over 25,000, which is a lot of price action to see fall. And you see it. It's reflected in the trading volume. On November 10th, we did $219 billion in trade. One day. That was not uncommon. Now, during November, we were doing 150 to 200 or so billion a day. Well, now, while there are exceptions, most days were in the $65 to $70 million range, which makes things tough for the centralized exchanges because they survive based on transaction fees and things like that. And transaction fees require transactions. And really, it's even worse because of the nature of the business. Generally speaking, as price goes down, so does volume. So if you've got any kind of fee structure based on the price of the item being transacted, well, that's going to go down too, based on that alone. And then throw in the lower trading volume altogether, and things could be getting rough for the centralized exchanges. Gemini is one, and I imagine it has to be painful. I've never been in the position of being a business owner and having to tell my staff, I'm sorry, but we can't afford to keep you. That's got to be very difficult. And that's exactly what Cameron and Taylor Winklevoss had to do. They posted on their blog that they're having to cut staff by 10%. They said it was due to, quote, turbulent market conditions that are likely to persist for some time. Which by itself is kind of scary. I mean, they're in a position to know. They run Gemini, huge crypto exchange. And full disclosure, I do use Gemini on occasion. They make a good product. I like it. I've never had an issue with them or their service. And that is my point. Because they seem like a well-run company, and they're having difficulties. They seem like good people to work for, too. They said they closed their physical offices during this. They said they closed so that, quote, these conversations will be held remotely to protect the privacy of each impacted individual. Our highest priority throughout will be to treat everyone affected with compassion and respect. Let's check the markets. At the time of writing, the global crypto market cap is $1.23 trillion. Fell slightly from the $1.25 trillion of yesterday. It's down 2.21% in 24. The top 5 cryptos by market cap are Bitcoin down 2.66%, Ethereum down 3.34%, Tether, USDC, and Binance Coin down 3.23%. Bitso, huge Latin America crypto exchange, 4 million users, 700 workers. Well, last week they had to do the same thing. They had to cut jobs. Out of 700 employees, 80 of them lost their job. In a statement, Bitso said, quote, Our decisions about the people who work in our company are made on the basis of our long-term business strategy and to support our customers and our strategy as a company. And interestingly, they laid off 80 while they still had 60 job openings active. They were still recruiting for positions while they were laying people off. They explained that, saying that they need to rethink the kinds of skill sets that they're looking for in their employees. They said that they need skills that would let the company move faster in the crypto industry. Buenbit, they lost 45% of their staff. They're based in Argentina. They're an exchange. And according to their CEO, it's due to the, quote, global overhaul that the tech industry has entered. And while Bitso didn't say that their losses were due to a shortage of capital, neither does Buenbit. They did say that they were working on a reduction plan for months, and that it was not at all linked to the crash of Terra USD or Luna. Now remember, they were offering their customers up to 18% returns for staking Terra USD. Now, Buenbit, they plan to focus on holding on to their existing operations. Their expansion plans, those got put on hold. They're having difficulty holding on to what they've already got. Another company that found their expansion plans in jeopardy, Coinbase. Coinbase is having a tough time of it. They're getting it bad. They're cutting job offers, and they're taking massive heats for it. Yep, if you applied to Coinbase for a job, you better check your email, because that's how Coinbase was notifying people. Mass email. So let's say you applied for a job at Coinbase. You went through their hiring process. You got a job offer, and excitedly you go through the salary negotiation process. You reach an agreement and things take off. You tell your friends, you tell your family, oh yeah, and you quit your job. Maybe this job offer requires relocating. Okay. Maybe you got out of your lease. You put your house on the market. Maybe you've got a visa that's now in jeopardy if that job offer disappears. And then you get an email, and that job offer did indeed disappear. That's a reality that some Coinbase hopefuls are now facing. Thursday, a letter was made public. This letter was sent to employees. LJ Brock is Coinbase's chief people officer, and that's the author of the letter. In it, they said Coinbase would be taking back a number of accepted offers and outstanding offers. They said, quote, as these discussions have evolved, it's become evident that we need to take more stringent measures to slow down our headcount growth. To be fair, they are getting a severance package. There's also some mention of a placement service. They called it, quote, a talent hub to allow them to opt in to receive additional support services. How much severance? I don't know. Unsubstantiated rumors state that it's 2 months of base pay. This comes after announcing an indefinite hiring freeze. Pretty rough reversal for these guys. They were a tech unicorn 5 years ago. Now, at one point last year, they were at an $86 billion public valuation. Now, that has dropped quite a bit, by 70%. Well, news about the job offer situation did not help their stock price any. It went down 9% Fridays when the news broke. Coinbase had been hiring aggressively. They went from 1,700 employees last year to almost 5,000 this year. And it's not just crypto either. Tech stocks, they have been having a very bad time of it lately. Tesla's looking at layoffs. Elon Musk announced a 10% employee cut and a hiring freeze. He said he's got a, quote, super bad feeling about the economy. NFTs, on the other hand, they're doing pretty well today. The global NFT market cap is up over $12.15 billion. It was $11.52 billion yesterday. Sales volume is up a lot, 30.4% in 24 hours. According to CoinMarketCap, the top 5 NFT collections by sales volume are Boki, followed by Akumu Dragons, Goblin Town, Return of Legends 2, and Return of Legends 4. Now keep in mind, some of these collections have very volatile prices, so do your own research. That said, all is not doom and gloom. Fidelity, they're ramping up operations. Their digital asset arm said that they were doubling the number of employees to meet the demand for crypto trading. The difference here is they're talking about crypto trading from institutional investors, not retail. FTX has a plan. The second largest crypto exchange is getting into equities trading. That makes total sense. What do we tell people to do with their portfolio? Diversify. That way, when something happens, like Luna's Black Swan event, you don't get wiped out. It sounds like the same theory here. Diversify your offerings so if one line of business experiences less demand, the entire business doesn't suffer. Speaking of diversifying, FTX is also looking into gaming. It looks like they might be investing in an Indian gaming startup, Mobile Premier League. They offer a bunch of games, and they've said that they're getting into play-to-earn and NFT-based games later on this year. And so I think that's how it's going to go, right? As we head into polar bear market territory, I think you're going to see two responses. Okay, you're going to see three, really. One's going to be to do nothing. One response, I think some businesses are going to fail because they're not going to do anything. Some mini crypto-related ventures are very likely to go under. I don't think we've seen the bottom of this bear market quite yet. But of the ones that survive, it will likely be to one of two responses to crypto winter. Build or cut. Go the route of Gemini and Coinbase and cut expenses. Flatten down your expense profile in hopes of cutting enough to survive. But you still have to serve your customers. So that's one response. The other response is the way of FTX and Fidelity. They're building in a different direction. Retail crypto investing is in the toilet, so Fidelity is building towards institutional crypto investing, meeting those needs. FTX is seeing the lower trade volume and is adding something else to trade. Which way is best? I don't pretend to know. I actually think that they're both probably quite viable for short and long-term situations. In the end, I think I like FTX's approach best. Build. Don't cut. Build. And that's going to do it for us tonight. Thank you so much for joining us. If you enjoyed tonight's show, like, comment, and subscribe. Give us a glowing review, because that helps other people find their way to this podcast. We're here each and every night at 10 p.m. Pacific, bringing you the crypto news analysis that you need to start your day. You can find us on podcasting platforms everywhere or on YouTube. Do you have questions or comments? Reach out and let us know. The email address is nick@cryptoovernighter.com. That's nick@cryptoovernighter.com. Or come find us on YouTube. Leave us a comment and maybe I'll read it in the next episode. We'll see you tomorrow night.